On to gold now, which has reached a significant milestone with its share in global central bank reserves rising to 24%. That marks a 30-year high and reflects a strategic shift by the central banks towards diversification. The latest gold bet is a complete reversal from the December quarter of 2015. Back then, treasuries made up 33% of the central bank reserves and gold just 9%. In fact, the yellow metal as a percent of the central bank reserves has nearly tripled over the last decade itself. And that is driven by both aggressive central bank purchases and the surging gold prices. At the same time, central banks have steadily reduced their exposure to US government debt driven by China. Let's break this down further. The shift signaling a historic move away from dollar-denominated assets like the global reserve system evolves, as the global reserve system evolves. Gold is no longer an alternative reserve asset. It is now a major reserve asset. Over the past 3 years itself, central banks added roughly 1,000 tons of gold. That has raised the gold's share in overall reserves from around 13% to over 24%. Emerging economies have been key drivers behind this rise, and they have actively boosted their holdings to hedge against geopolitical tensions and also the inflationary risks. Very important. Central banks favor gold for its durability, the liquidity, also the lack of counterparty risk. And they have used it to diversify away from traditional dollar bets.